we have always been very clear, that we're going to do a token sale, right? So I think many of these criticisms came in. I feel like helicopters, they fly by and they drop shit. It felt that way to me.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin, author of The Cryptopians. I started covering crypto 8 years ago, and as a senior editor at Forbes, was the first mainstream media reporter to cover cryptocurrency full-time. This is the February 2nd, 2024 episode of Unchained. With iTrust Capital, you can buy and sell crypto in a tax-advantaged retirement account. Enjoy significant tax advantages, 24/7 access, and the industry's lowest fees. Vaultcraft is your no-code DeFi toolkit for customizing non-custodial automated yield products on any EVM chain. Join the referral program today and start earning rewards. Learn more at vaultcraft.io. Today's guest is Meow, founder of Jupiter, a DEX aggregation protocol on Solana. Welcome, Meow.
Hello, Laura. Nice to meet you.
Congrats on your successful airdrop this week. It didn't seem to break anything. And right out of the gate, it gave your DEX aggregation protocol, Jupiter, an $800 million market cap. So explain to us what it is that Jupiter is and how it works.
Okay, so Jupiter started as a DEX aggregation, right? But actually, we're actually a really broad platform now. Okay, we have aggregation, we have limit orders, we have DCA, we have perps, and recently we launched Launchpad, right? So I think we are also the most used service on Solana. We refer about 80% of organic volume on Solana, right? And recently we actually also crossed Pancake and Uniswap in terms of monthly active users, right? Wallets. So I would say that we are probably, if not the most used trading platform in DeFi today as well. Yeah, and our perps platform also did 1.4 billion in volume last week. Yeah, so I think we started out being a DEX aggregator, and don't get me wrong, we spent a lot of time, right, making sure that we do the absolute best possible routing, right, and in Solana, right? But we also spent, I think we have also grown quite a bit, into different products, including perps and our new Launchpad. So I think that's what we're doing.
When I started and I said you're a DEX aggregation protocol, so what would you describe Jupiter as?
Oh, good question. I'll just say that we're building right now. I say that we are building the best exchange in DeFi. Right? Basically, I think we have pretty much everything you need in one platform, right? We have swap, which is the aggregation, and for aggregation, because we aggregate, right, we promise you best price, best user experience, and best token selection, right? It means that whatever token you want is there, right? And the best UX and the best price, right? And then we have limit orders, and your limit orders is actually really special because you can actually place limit orders. You don't need markets for limit orders, right? And then your DCA. So DCA is actually great because DCA is by far the fan favorite, right?
Right, dollar cost averaging, just for non-traders who are listening to the show.
So the very cool thing is that people use us for like DCA for a lot of different things, right? For example, they buy low liquidity coins, right, or every hour, right? So actually, originally when we did it, we're like, okay, people can use DCA to like DCA sold over 1 month or something, right? Every day for a month. No, people don't do that, right? What people do instead, right, is that they buy very low liquidity coins and then they buy it like incrementally over a few minutes or like every 5 minutes, right? So that's what they do. Right? People love it, right? Because it's a feature that I think doesn't exist anywhere else, right? Or it's not done well anywhere else, on Jupiter.
And that's just to like reduce price slippage?
Yes, precisely. Because you have a lot of things that because for a lot of these low liquidity coins, if you buy like by 5K, right, it's actually you will go like you will hit like 3% already, right? And not just that, you're also a sucker because you imbalance the pool and then someone up you, right? Things like that, or someone front run you, many of that, right? So you just do this year, right? So it's really cool, I think, and of course there are perps as well, virtuals, and our perps are probably, I think, definitely top few in the industry. And then if you do not consider DYDX and all the other L1s, right, we are probably the top, around there. So so I think we are doing pretty well as well. Yeah. Mm-hmm.
And so how did you you're doing all this in Solana, but as far as I understand, you've been around in crypto for a little while. So tell us how you got into crypto and came to launch Jupiter.
Long story short is that my crypto journey began. I met a friend in San Francisco who just mysteriously became like he's just one of the smartest guy about Bitcoin I ever knew. Right, he taught me everything I knew. It's funny because I met him at a party, right, a Dogecoin party, right, in San Francisco.
And what
And
year
then
was this?
17, no, 16, can't remember, around there, right? So long ago.
Okay.
But anyway, long story short, I asked him, he asked me what do I know about Bitcoin. I said nothing, right? I asked him what he know about Bitcoin. He said nothing. So turns out that one of us are lying, right? So anyway, he knew everything, right? So he taught me everything. He taught me everything I knew, right? It was a chance encounter, but he taught me everything I knew, right? And after that, I think I went to really advise and help out in a bunch of like projects, including portfolio, which obviously got bought by FTX. So I was an advisor there. And then after I went to advise projects at Instadat, which is the like Kyber Instadat, and a bunch of others. And we also started WBTC, right, which is the most used wrap token. So WBTC was started as a collaboration between so we did that Big Go, right? So together with Big Go and Ren, we started WBTC, right, which is obviously the most used token today, right? Yeah. After that, at some point, I think I wanted because there was all ETH, right? So before this all ETH, right? So I think at some point, I wanted a new environment, and then I came to Solana, and then we started a earlier project that then from there we became Mercurial, and the Mercurial became it became Mitra, and then as part of that process we started Jupiter. So that's how we ended up with two main projects under our studio right now.
And so this week obviously was the big event with the airdrop, but I know that you guys kind of did like a sort of test run. You had like the when token airdrop. So what was the purpose of that? Like, what did you learn from doing the when token airdrop that helped you prepare for this one?
At Breakpoint last year, right, I told everybody I want to be a launchpad, right? Because I felt that launching new tokens is such an important part of the process. It's really important. It's really, really important, right? It's but I also felt it was I didn't like the current models. Everything felt wrong to me, right? From token get the launchpads to the other ideal models, I just didn't like how they work. And then in addition, right, one of the things that is very important in today's crypto scene is airdrops, right? It's very, very important, right? Because that is almost like the main event, right? And there hasn't really been a launchpad that integrated the idea of airdrops into the launchpad, right? And in some sense it's very tricky, right? Because launchpads usually have people. So we wanted to build a system that. So I think anyway, and we had that problem too, right? So in essence, what we ended up doing was that we didn't end up trying to launch JUP, right? We ended up trying to build a launchpad. Because think about it, right? If I launch a JUP token without using my launchpad, right? Will I have any credibility to ask any other project to use Jupyter as launchpad? Not possible, right? It's just not possible, So I had to launch Jup using my own launchpad, right? Does it make sense? And then, but then, so anyway, I was just musing, right? So I was just talking to the community about it, or we were just on Discord, right? Because I spent a lot of time on Discord, right? So I was just talking to Discord and everything and stuff, and someone just said, "Hey, why don't you just launch a memecoin, right? For as a dry run for Jup, right? Because there's a lot of unknowns, right?" And I was like, "Okay, that's a really fucking stupid idea, right?" But then obviously, me being me, if it's a stupid idea, I gotta test it, right? So I went on Twitter and be like, "Hey, someone suggested that we launch a test coin to test the launchpad, to test the launch, just like how how Elon launch test rockets, right? So if Elon can launch rockets, right, why can't we test a token launch, right? Think about it, So long story short is that we said, okay, we're going to launch a token before before Jup. It's much lower. It's much more lower stakes. In much lower stakes because the token is obviously much less value, right? But what we can also do is that we can also technically stress test it, right? That means that we can actually, so for Jup, the number of recipients is at 955k, 955k. So for this, for the WEN token, we airdrop to more than a million, right? 1.1 million or something, right? So in many ways, it was just as technically stressful. It required us to really scale our RPCs, really scale up our RPCs, really scale our infra, and really get the UI right and everything. But in a much lower stake context, yeah. So that was the point of it, Yeah, obviously it was something fun as well, right? Because so as of now, after testing our launch system with both WAN and JUP, I feel confident now, to tell people to come use us, as a launchpad, So that was a big part of it. Yeah, does it make sense? Yeah.
Yeah. So, in a moment, we'll talk more about how the launch went. But first, a quick word from the sponsors who make this show possible. Did you know you can buy and sell crypto with tax benefits in an individual retirement account? iTrust Capital makes this possible. But what does this mean? When you buy crypto outside an IRA, like on an exchange, you face taxes on gains. But in an IRA, like a Roth IRA, gains can be tax-free. iTrust Capital also has some of the lowest fees in the industry and 24/7 accessibility. Start now and maximize your retirement savings with iTrust Capital. Back to my conversation with Meow. So as you know, the day of your airdrop, the crypto community did seem impressed that, nothing broke. But as I'm sure you saw, then there was a lot of criticism afterward about how people seem to think that the airdrop was beneficial to the Jupiter team. So some examples are people are pointing out that the Jupiter team sold about maybe 20% of the circulating supply from day one at what they consider a high valuation. And the way that this worked, they're saying that the Jupiter team provided liquidity in a liquidity pool on the dynamic liquidity market maker Meteora. But pretty much for at least that first hour, the liquidity pool was basically just Jupiter selling to buyers. And that, the price that you guys had set was that it would reach about 70 cents as the number of tokens sold reached 250 million. And, they were pointing out that you guys made this money without any vesting. So what do you say to these criticisms?
Oh, I say they're right. I mean, that's how it works. But as usual, the devil's in details, right? The important thing to understand about this pool, right? It's not a fundraising pool, first and foremost. Okay, it's not a fundraising pool, first and foremost. Okay, it's first and foremost a liquidity bootstrap and backstop pool. Okay, let me explain to you. Let me explain
I think they're saying the net effect is that it's as if you raised $250 million.
No, it's actually not 250. But first net effect, right? The first net effect. Oh, by the way, first of all, I don't actually. I think we should raise. I don't actually feel bad about raising at all. We didn't do any OTC, we didn't do any VC rounds for Jupiter, right? And we wanted, and the reason we didn't do any of that is that we wanted our first sale, right, to be with the community, right? That's it. We wanted it to be an open market sale, right? So a total of so think about it, right? Your favorite, whoever criticized me, asked their favorite DeFi protocol probably sold like 20% of tokens or something, right, to a VC, right, who vested over time. Right, we didn't do any of that, or OTC tokens, whatever shit. We didn't do any of that stuff, right? Instead, what we did is very simple. We took 2.5% of total supply, with no further people investing in Jupiter, none, right? 2.5% open market, right?
Right, you're talking about not the ones released in the airdrop, but the full 10 billion that will eventually.
Yeah. So 2.5% of the 10% was in it. So 10% was released in the airdrop, right? And 2.5% was for. But by the way, I think just as some context, right? We announced that we're going to do a 20% token sale last year at Breakpoint, 20%. Okay, and based on community feedback, we got down to 10%, right? And then based on community feedback again, we got 5%, right? And then after we realized, oh shit, the price is going to be really high, right? We got down to 2.5%, right? So actually, we have been very clear about our intentions to do a token sale from day one, right? If you have been following any of Jupiter stuff, including the Breakpoint, we have always been very, very, very clear that there's a token sale coming. We just weren't sure how to do it. Okay, that's a first one.
So initially, you were calling it a token sale.
Full stop. Done. No, anyone who is interested, check out my Jupiter Breakpoint presentation, right? It was I presented it in Breakpoint in front of thousands of people, and also in front of everybody, and I've been talking about it for months and months and months on Discord and on anywhere. Okay, I even went on 2 live streams before the talk. Okay, and even for when, right? I tweeted a handover ceremony, right, whereby the tokens were taken out and given to the team, right? The team that's running when. Right, first of all, okay. So I think if you have been following Jupiter in any way, you will know that number one, we have always been very clear. We know that we're going to do a token sale, right? So I think many of these criticisms came in. I feel like helicopters, they fly by and they drop shit. It felt that way to me. Right?
So you feel like you were messaging that it was a token sale. The mechanism of this liquidity, being a liquidity provider, that came later after you had called it a token sale. Is that?
I feel like first of all, I do apologize, right? I do apologize, if there's any misunderstanding, right? I think on my end, I do feel like I've been signaling and communicating very, very clearly all year long that is I'm doing a token sale, right? Very clearly. I mean, you can't get more clear than going on stage in a few thousand people and say calling a token sale. You just can't get more clear than that. Am I right? Right? And thirdly and secondly, and you must understand one thing, Laura, you must really understand this thing. There is an extremely good chance that I don't actually get any money out of this, USDC out of this at all. Okay? Because first and foremost, this is a backstop pool. Now, what does that mean? It means that anyone, whether you're an airdrop recipient, okay, or someone with buyer remorse, right, you can just dump into this pool for 7 days. 7 days, okay? And you know what happened earlier in the day, right? People were flooding it so hard that it really just started retreating, right? It really started draining out, right? All the way to like 54, 53 or something, right? Until it started reversing back, right? So that's a very good chance, right? That it just get down to nothing, So the whole idea that, so first and foremost, right? So you must understand why we do not see that as a token sale pool, right? Because first and foremost, it's a backstop pool, okay? Now, what does that mean? It means that at any point in time, right, the JUP token falls below 0.4, 40 cents, right? We get nothing. Full stop. Right? We get the pool. That's it. So we get tokens back. Right? And the fees from the pool.
Yeah, the critics are saying that, since the tokens were made out of thin air, it's like the risk is, just
that is actually a very, 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 very unfair statement to make. Guys, sorry man, that's a really, really, really unfair statement to make. We worked extremely hard, okay, to create an asset that people wanted to buy. Okay, right? That a lot of people felt symbolizes DeFi 2.0. Okay, and we were extremely careful, okay, about every single token that got released. Okay, check out JUP.research, right? JUP research, JUPREAR.ch. Okay, check it out, right? Really check it out. We documented the whole, because we treat JUP as a very valuable resource. Okay, so we documented every single step of the token minting, accountability. For example, right, all our core wallets, we can't actually sign or release it. Why? Because we actually got professional custodians and 3 ecosystem people, right, well-known people, right, such that like if you want to unlock the core wallet stuff, they have to sign it, right? And then we are very, very close to finding the professional custodian, right, for that. So I think we build the community up, the user base up, the product up, right, for this to be a very valuable token. Okay, first and foremost, okay, it's not out of thin air, okay? That's very important, okay? If it's out of thin air, why don't they do it, right? Think about it, right? If it's out of thin air, why don't they do it? No, seriously, Laura, work with me, okay? If it is really out of thin air, right, why don't they do it, right, and make it and set it at this price and let people buy it? No, it's not out of thin air, Laura, it's not. It's the manifestation of the years and years of commitment, effort, commitment to the ecosystem, right? And community building, ecosystem building, okay? And then resulted in the token that people wanted to buy, okay? As a result, that token had value, right? And we were very careful of protecting its value, okay? We locked everything up properly, had everything in wallets that the community can track, right? And we took a small piece of that out of a sale, right? And remember, there's no more vesting, right? There's 5% for Mercurial and 20% for team, right? But there's nothing else. Okay, so we were very, very careful how to use it. Okay, that's it. That's all I'll say. Yeah.
Okay, and then so there was another criticism about, as we mentioned, you were using Meteora, which was this dynamic liquidity market maker for the liquidity pool. And I guess on there, the swap fee that liquidity providers earn consists of both a base fee and a variable fee.
Mm-hmm.
And the variable fee is based on real-time volatility. And they're saying that this dynamic where the sales were mostly just all happening in one direction created a lot more volatility, which then jacked up that fee that you would earn. So what do you say to that criticism?
I'll say that correct. I'll say that correct. It's actually one big, again, this system is very new, right? So I think one thing I'll say, this system is very new, okay? It's a very new system. We are experimenting everything. Okay, like guys, this is our second launch. Okay, it was our first launch. Literally happened less than a week ago. By the way, guys, just for some context. Okay, the when launch happened 4 days before the JUP launch. 4 days. Okay, right. So yes, we do things on the fly for sure. Okay, we learn a lot. Okay, the when for the when the fees were high, but the pool was relatively small, like 3 million, right? So it just flew through really fast, right? So we didn't really pay attention. We didn't really think about that much, right? For the JUP one, it went really slowly, and we were able to see that. No. So they're right. So 100% right, right? If I would do it again, I would do it outside much lower for sure, right? Because it wasn't just a problem. It wasn't just a problem with the fees. The problem was actually that it really kind of hurt prices, hurt the pool as well, price discovery wise. So for sure, yeah. Anyway, guys, I think if anyone is trying to, but if you are asking that question out of good intention, right? They're saying, oh, you can probably improve the system by doing a fees. I 100% agree, no problem, right? But if you are insinuating you're doing it for the money, then I think our track record speaks for itself. We spent a very, very long time. I personally did a lot of projects for no money, right? And then we spent a lot of time in Solana making no money at all, right? Just working our ass off, right? Yeah. So I feel like I feel like we are very clean here, in terms of how we think about it. So I think so in summary, 100% for future launches, the pool fee will be much lower, right? And then for this one, the pool is set already, and we just learn from it. I honestly, it really hurt us. I'll tell you the truth. This pool fee thing hurt us yesterday. Because it really hurt the pool from breaking out. It's okay, we learn. As I said, okay. So Laura, one last thing is that I always tell people that. So if you look at my tweets, right now, this is very important. Okay, this is very, very important. I've always said that we're experimenting, and we will mess up. Okay, and all mess up. And we mess up, it's my fault. Okay, done. So I own it. Okay, I own that the fees are too high. I own that the number of the systems that people wanted to use to buy the token, that DCA all didn't work that well. I also own that. I also own that some of the comms were not done as well because, for example, earlier, right? It's like to me it was so clear what it was, right? That when I communicated okay, it's a DLMM backstop. It's team owned DLMM backstop liquidity pool. So and then so it was hard for me to register that people might not understand that, So I apologize for that, right? But anyway, I think I'll tell you, like I mess up a lot, and I learn, that's how it works, yeah. But now I think, but the good thing is this: after we do JUP, right? The good thing is this: every project that uses LFG now, right? They won't have this problem. The whole world will understand how it works, right? And then I think it's great, yeah.
All right. And so one other question is, I guess the plan initially was in the liquidity pool for the price to go up to 70 cents as the number of tokens sold was about 500 million. But then shortly before the airdrop, I guess that got changed. So it was 250.
No, 250.
No. But I saw a screenshot of before the plan was it would be 500 million sold for it to reach that price. But then it got changed to 250 million sold for it to reach that price. So basically, you guys were selling at this higher price faster. So why did you make that change?
I mean, we keep changing things, right? I mean, like in fact, if you look at our website, there's this entire model. It's actually on the website. Actually, it's actually under lfg.jup.ag/design. Okay, and you can find that. So it's a tool that our intern built. It's an amazing intern, by the way. He built a tool to allow anybody to input a few parameters and output the graph and output the price rates and everything, right? So what we were doing is that we were actually very, very actively trying to figure out what the good system was, and we actually made a decision a day before. Again, we do things we are quite experimental. Okay, we finished the when thing last week, last week, and then we started, and then we did handover on Monday, I think, and then we did JUP on Wednesday. Right? So yeah, it was actually pretty tight. Anyway, what happened was that we just looked at numbers and we're like, okay, is this too much? Do you want to do this thing, right? And then we said, hey, it feels better to do it this way, so we cut it down, and then we correspondingly we cut, and then we published the tokenomics to reflect everything as well, yeah. So basically, it was a matter of like us like looking through the numbers and thinking about it. I would say if I do it again, I would say that I was a bit too aggressive on the pricing, the low to high price, and the reason. Okay, here's a funny thing. here's a funny thing. Do you know basically what happened, right, is that in earlier launches, I think we were very heavily criticized. Okay, the one thing to understand about the whole LFG for the listeners who are not too familiar with LFG, right? The core concept here is open market, right? That means that whether you're airdrop or you're bot or you are the DRM pool, it opens at the same time, right? So it's a very dynamic, like open market system. Okay, and the reason is because I think there's nothing that I think unlike other it's on chain, right? So anything happen, there's multiple pools happening everywhere, right? So and the reason and it's actually really important to understand that, because we actually feel like that's actually the only way to do like proper, like, price discovery, right? Everything, because there'll be a lot of people dumping too, right? Okay, but back to the point. So actually, but in earlier launches, we were heavily criticized, right? The community was killing us, right? Because some of the early botters, they got in at a very low price, right? And they made like millions, right? And then the community was very, very unhappy about it. Okay, so if you ask me, looking back, what happened was that we over protected for that scenario, right? By setting entry price a bit too high, right? So basically, what happened ended up is that the max price ended up being like the per price, and then the initial price started being a bit high as well. It's actually because we wanted to protect against like botters being too aggressive early on, But I guess we got a bit carried away by that, right? I think if I do it again, I'll probably lower both, right? I'll lower 0.4 to like 0.25 and lower 0.7 to like 0.655 or something. I think that'll be a good range. Hindsight, yeah.
Okay. Yeah. And last criticism, again, we just need to go through these to address some of the stuff I've seen online. But critics are also pointing out that Jupiter paid itself 100 million tokens for use of its own launchpad.
Oh, that's great. Yeah, for sure. No, that's great because we're eating on dog food, right? Again, we don't get the tokens. The DAO does get. Sorry, no, we get 25% of that. No, Laura, dog food, it's very important. Okay, like dog fooding. Okay, like it's a commitment. Okay, if I'm gonna ask other projects to pay 1%, right? Then I'll pay 1%, right? Again, I don't actually I get the team gets 25% of it, right? The most of it goes to the JUP DAO. Okay, so the JUP DAO from day one gets 0.75% of WEN and 0.75% of JUP. That's nice, right? It's a really good incentive, right, for them to start. Again, we don't get most of it, right? And we wouldn't sell a JUP anyway, like we just wouldn't sell it, So it's cool, I think it's great. I think to anyone who's criticized that, I'm like, no, I've been signaling that forever. Okay, I've been I tweeted about it like 5 times. Okay, so if you're gonna criticize us without understanding that most of it goes to the DAO, firstly, okay, and secondly, we're dog fooding, and thirdly, I've been talking about it for a long time already. Come on, guys, give me a break. Start reading. Yeah.
Okay. So obviously now you overcame this major hurdle. Obviously this launch was, I'm sure a big deal. So what are the next plans for Jupiter?
I think the next plans for us is really to start to stabilize. I think honestly, right now, I think everyone's like really, really tired. I think I feel like anyway, I apologize for being so annoyed. But I feel like I woke up today to a lot of accusations that were based on bad faith, lack of reading, and no questioning. Right? There was no attempts to ask me what happened. There was no attempts to clarify, read through the previous things I've written. No attempts to actually read through. I mean, you're a researcher, right? Right? I mean, you know, right? Before you throw out accusations for people, you will read, right? You would. I know you would, right? So I feel like we spend a lot of time trying to figure out a launch system that is actually very community friendly. Again, we don't take out anything until the community, until the airdrop dumpers and buyer remorse and everyone has signed in. And also the other thing is that this system also allows buyers their confidence, right? Because having this pool here, Laura, we are actually airdropping a lot of value. Okay, at current numbers, it's like 600 plus million value, and that means that you need a lot of buy demand, right? So buyers need to have a lot of confidence. Okay, And then what happens is someone starts, so if the price starts fluctuating like crazy, right? The buyers have no commitment to buy, But what this pool actually does is that it absorbs a lot of the sell demand, right? From people dumping, right? And that's actually the reason why, despite it being such a major airdrop, you see the price increasing slowly, dropping a bit, and being like remarkably consistent. It's because you have this pool there, right, to really buffer a lot of the buy and sell demand, right? And honestly, I think it worked as planned. It really worked as planned, right? So I'm really happy about that. But I feel like instead of trying to understand the mechanics, I feel like people were not interested in understanding mechanics, but they were really interested in like slander, and that made me very, very upset, because we really spent a lot of time thinking about how to build a better launchpad. I think we're not perfect, but I think we made progress, into doing so. Yeah. So anyway, I apologize if I came across as like being very annoyed, but it has been an extremely stressful few months. And then to finish off that with like a lot of fart and just unfounded for I don't get me wrong, certain things I did wrongly, okay? I think I was very technical in how I described the pool, firstly. Okay? I apologize for that. Okay? And I assume a lot of context because I've been saying things in my Discord and live stream for a long time. So I apologize for that. Secondly is that I understand why people might be confused because it's never seen before, right? In crypto, we have never experimented before with this model before, right? Of open model, launch model, that no one done it before, right? And thirdly, the price curve itself, I'll tell you, I'm actually very comfortable with the things. Let me explain to you why. If I have successfully delivered a token, right, that's worth this amount, right, and it has stayed and it has been in the market, and we've withstood all the selling pressures, right, for 7 days, I feel very happy. I I earned it, right? And if things go wrong, then it dips below a certain point, then I don't get anything, right? And I feel extremely comfortable with that, in that sense, So I feel like so I think yeah, so I feel like and yeah, I think for anyone that wants to, so I'll say one other thing about Launchpad before I move on. We are trying to create a new model, okay? Once that does actually reward the team, but also make sure the team actually stays responsible, not just for the initial pump, right? But for a sustained amount of time. That's firstly, okay. We do actually want. So if you're a team that's looking to launch a token, right? We want to help you raise, get the money. Okay, Ken. But we want to help you do it in a way that is like good for you because you get a community, you get everything, and you do not leave your community hanging. Okay, in case things don't go well. Firstly, right? Yeah, and that's the and anyone who's interested in like improving this model, right? I'm on Twitter, where Meow, right? I'm always available on Twitter. You see me on Twitter, I'm always available, right? If you ask me questions, right, I'm always ready to answer. Post something on my forum, right? I'll answer you. I promise you. Okay, Ken? But don't come with bad faith. Okay, we really worked extremely hard last 2 years. Okay, right? And to do this at a time whereby we are the most vulnerable, right? I don't think it's good faith. Like seriously, people are just like copy and pasting random shit. And I don't like that. Yeah.
And I think we're going to release a white paper before the airdrop, but that
Sorry?
didn't happen. When people expect that?
I don't know, maybe the I maybe I think February. I think I wanted to do white paper, but I think I got very caught up in actually building a launchpad. So our whole team was like trying to build a launchpad, and we didn't do it. Anyway, to answer your question earlier and stuff, I think what is coming up with this, right? I think we are looking for really good projects, right? Because we have a really good community and distribution, right? I think we the launchpad is not perfect yet, but we are getting better, right? Even the Jupiter launch, we learn a lot of things, right? That we can use to help other projects, right? That's firstly. So we are looking for like great projects to launch on the launchpad because we think that's great because that brings so much more excitement to the community. I love it, right? And then the second thing that second do is to obviously improve our products, right? I feel extremely happy with our set of products right now. Swap aggregation, the LO, DCA, perps, right? And launchpad, right? And also gateway, right? So the next step is really to improve those, right? So I think it's just about improving those things over the next 9 months, right? We don't need that many new products, but it's just really about making them much better, right? And thirdly is that we also want to invest in infra, as well, because we are getting to the point whereby like, okay, we do need to run a lot of our infra, right? Whether it's around interchain infra or whether it's around like a validated infra, so we do need to get to that point, right? And part of the reason why we want to make sure that we had capital moving to this new phase, we are actually going to start into moving into a more like capital intense phase, right? So that's what we're going to do as well, yeah. So those are plans. So basically, a lot more new projects, a lot more high quality projects for Launchpad. Firstly, secondly is that to really improve our systems, products. Thirdly is to like really have a much longer term plan for infra needs and also start contributing to the Solana like validator, the core, the validator core. And lastly is that I think there are a number of things I really want to drive, right? For example, it's a crazy idea, but I don't see any reason why companies like not crypto companies, the actual companies, right, cannot list on chain, right? Why must they go to Nasdaq? Why must they go to Singapore Stock Exchange? Why must they go to Indonesia? Why can't they list on chain, right? They can get much better community, much better funding, much better everything. So I don't see why not, right? Obviously, it's a longer term plan, right?
Wait, you're
About
talking about like stocks or?
yeah, like listing, right? Like listing. Like if say for example, imagine you are a internet company, right? That's doing well, right? How do you make it possible, right, for you to list on chain, versus going to like Frankfurt Stock Exchange or something, right? How do we make it more compelling of it for you to list on chain? And secondly, obviously on the flip side, right? How do the on chain participants, right, know that you as a company has the right auditing, has the right, is certified and all that kind of stuff, right? So that's actually, but I think if you can bridge the gap, it'd be great, because we will have like, we want the next frontiers of like, like really merging the off-chain world, on-chain world, right? Like in the stock markets, So that's, and then the other thing I really want to do is to really bring as many markets to Solana as possible. Because like for example, forex markets, RWA, all these markets, it's not about assets, by the way. People talk about assets, but assets is not important. What's important is the markets, right? Because when you have you can have an asset, but there's no market, that's pointless, right? So what you need is markets, right? And then what Jupiter does is that Jupiter does a really good job, right, of like just bringing all those markets together and allowing you to transact across them in one transaction, right? So basically, what I want to do is that I want to personally like really drive to like help a lot of the companies like bring more assets, right, like forex and everything, right, into the network, right, and working with Cumberland and other guys, right. Because if that happens, then you can literally go from like a primitive market asset to like a meme coin, right? Or and you can do those uses to pay for your PayPal, something, right? So I think the goal is to bring as many markets as possible into one network, which is Solana, right? Because when they're all on Solana, you can execute across all of them in an extremely cheap and fast manner, and Jupiter can be helping with that. Yeah. So those are like the three. So yeah, so a lot of things to working on. Yeah. Mm-hmm.
Yeah, it sounds very ambitious. All right, well, thank you so much for coming on Unchained.
Yeah, of course. Thank you.
Don't forget, next up is the weekly news recap, today presented by Unchained contributor Megan Christensen. Stick around for This Week in Crypto after this short break. DeFi just got way easier with Volcraft, your no-code toolkit for building, deploying, and monetizing automated yield strategies in a few clicks. Forget spending months of R&D and capital when you can instantly launch your crypto fund with Volcraft on any EVM chain. From wallets and institutional service providers to anon DeFi degens, anyone can use Volcraft to supercharge their crypto. Join Volcraft's referral program, unite with the community, and supercharge your crypto. Details on volcraft.io.
Thanks for tuning in to the weekly news recap. I'm Megan Christensen, a producer here at Unchained. In a major turn of events, FTX, the giant cryptocurrency exchange that filed for bankruptcy in late 2022, informed a bankruptcy judge that it will not be reviving operations. This frees FTX to commit to fully repaying its customers. The failure to restart the exchange underscores how weak its infrastructure was, that it could not find a partner willing to put in the money and effort to build upon the remains of what was once the third largest crypto exchange by volume. This move is expected to bring some relief to the numerous customers affected by FTX's collapse, but pegging the value of customer accounts to the date FTX filed for relief left customers complaining that a collapsing FTX drove prices down for 9 days before it sought protection. Also this week, the FTX estate told Bloomberg that it had doubled the entity's cash reserves to $4.4 billion from the $2.3 billion in October. Meanwhile, a judge authorized the sale of FTX's Bahamas properties, including Sam Bankman-Fried's $40 million penthouse, as part of the exchange's bankruptcy proceedings. Lastly, in related news, Effective Ventures Foundation agreed to return about $26.8 million in donations received from FTX. Celsius Network, the cryptocurrency lending platform co-founded by Alex Mashinsky that was under Chapter 11 protection, has commenced the distribution of over $3 billion in assets to its creditors as part of its reorganization. This crucial step, confirmed by the United States Bankruptcy Court for the Southern District of New York, coincides with the emergence of Celsius from bankruptcy. In addition to the distribution, Celsius creditors are now the owners of a new Bitcoin mining company, Ionic Digital Inc., created by Celsius with mining operations managed by Hut 8. Tether Holdings Limited, the entity behind the popular stablecoin Tether, reported an unprecedented financial performance for the fourth quarter of 2023. The firm's net profits soared to $2.85 billion, a notable milestone in its operational history. This achievement was largely driven by substantial earnings from U.S. Treasury securities, contributing approximately $1 billion to the net operating profits. The remainder of the profits primarily stem from the appreciation of the company's Bitcoin and gold reserves. The quarter also witnessed remarkable growth in Tether's excess reserves, which climbed by $2.2 billion, reaching a total of over $5.4 billion. These excess reserves are crucial in covering the firm's outstanding unsecured loans, which stood at $4.8 billion at the year's end, thereby addressing past community concerns about potential risks associated with this aspect of Tether's portfolio. For the entire year of 2023, Tether declared a net profit of $6.2 billion. This financial strength was attributed to various sources, including $4 billion from U.S. Treasury bonds and other non-crypto investments. The firm's total assets under management included significant holdings in U.S. Treasuries, Bitcoin, gold, and venture capital investments. Bankrupt crypto lender Genesis reached a settlement agreement with the SEC regarding a civil lawsuit, Bloomberg reported Thursday afternoon. This lawsuit accused Genesis of violating securities regulations through its Gemini Earn program. Genesis, a subsidiary of Digital Currency Group, has agreed to pay a $21 million civil penalty to resolve these allegations. However, the payment of this penalty is contingent on the company's ability to fully repay its customers and other creditors in its Chapter 11 bankruptcy proceedings. The settlement, pending approval by a bankruptcy judge, addresses claims that Genesis illegally raised funds from investors via the Gemini Earn program. This program, operated in collaboration with Gemini Trust Co., offered interest payments to customers for loaning their digital assets. The SEC had argued that this constituted an offering of unregistered securities. Both Genesis and Gemini have denied any wrongdoing, asserting that the Earn program was not a security. The program has been terminated since then. German police executed one of their largest cryptocurrency seizures, confiscating over 2.1 billion euros worth of Bitcoin. This operation focused on dismantling an illegal, covert streaming service. The seizure at the scale was a major blow to digital piracy networks leveraging cryptocurrencies. Concurrently, in the UK, the police made a significant seizure of nearly £1.8 billion in Bitcoin, linked to an investment fraud scheme originating in China. This operation was part of a broader investigation that stretched across international borders, highlighting the increased global efforts to track and seize digital assets connected to criminal activities. Binance, the largest cryptocurrency exchange in the world by volume, now permits larger traders to store assets with two external banks, possibly due to concerns arising from its recent $4.3 billion U.S. regulatory fine. This operational change comes as high-volume traders increasingly seek platforms with robust security and stability in a dynamic regulatory environment. Binance has entered into partnerships with Sygnum Bank and Flowbank to custody these assets. These collaborations are geared towards enhancing the access and management of cryptocurrencies for users. Sygnum Bank specializes in digital asset banking, while Flowbank operates as an online bank in Switzerland. On Wednesday, Ripple suffered a significant security breach, with co-founder Chris Larsen confirming that his personal accounts were exploited. The hackers stole approximately $113 million. Larsen's acknowledgement of the unauthorized transfers has brought attention to the security vulnerabilities even high-profile individuals in the crypto industries can face. Abracadabra.money, a decentralized platform, suffered an exploit. This security breach led to the destabilization of Magic Internet Money, causing it to lose its peg to the US dollar. The exploit was executed through a series of complex transactions that manipulated the price of the collateral in the Ethereum cauldrons, ultimately leading to the unauthorized withdrawal of funds. The immediate impact of this incident was a noticeable depegging of the MEM token from its intended one-to-one parity with the US dollar. MEM went as low as 0.76 before it rebounded to 0.98. Polygon Labs, the development team behind the Polygon blockchain, announced a reduction of its workforce by 19%, following a period of rapid expansion during the last cryptocurrency bull run. The layoffs come as the company adjusts to the current market climate and refocuses its strategy for sustainable growth. This decision reflects a broader trend in the tech and crypto industries, where companies are reassessing their growth strategies and workforce needs in response to the changing market conditions. For instance, this week, fintech giant PayPal fired nearly 2,500 employees. For the remaining employees of Polygon Labs, there was good news, however. Polygon concurrently announced that it was giving employees company-wide a 15% raise and eliminating geographic differences in pay. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com. That is unchainedcrypto.substack.com and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin with help from Nelson Wang, Matt Pilchard, Juan Aronovich, Megan Gabus, Shashank, and Margaret Correa. The weekly recap was written by Juan Aronovich and edited by Jean-Hee Kim. Thanks for listening.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.